Okay, so now we are going to do the work together 8-2. And in section 8-2, we're doing closing entries. So we did adjusting entries in section 8-1. 8-2 is closing entries. So remember that we close all temporary accounts, and our income statement accounts are some of those temporary accounts. So we're going to start with sales because revenue is the first thing that we see on our income statement. So we come down here to sales, and we need to close this out. So what we're going to do is on July 31st, we're going to put in the date. Because we have a credit balance of 5,511, we are going to then debit the account 5,511, and that gives us a zero balance. And we just put those lines in there so that we know that we didn't forget to do the balance, that we simply zeroed it out, so there is no balance. Now, after you've done that, we need to come back here to the journal page. We're going to do our heading, closing entries. And then July 31st. We have sales. The posting reference is account 410. So 410. We debited 5,511. And now over here on the ledger for the posting reference, we need to put page 4. Okay? To do the second half of this, because we have a debit and no credit, to the second half of this, we're going to move this amount to the income summary. So, July 31st, we're going to, because this is a debit, we're going to credit 5,511, which will give us a credit balance of 5,511. Now, we need to take this and put it on the journal. So, income summary, credit 5,511. The account is 330. And then over here for posting reference, we do page 4. Now, if it's easier for you to do both of the general ledger accounts at the same time, so if we would have done these two and then come over here, that's fine. I just don't want you to forget to do them. So next we're going to do the expenses, and this we're going to kind of do all together. So expenses are also your income summary or your income statement accounts. So we are going to come to advertising expense, the first one we do. On the 31st, we need to, because this has a debit balance of 821, we need to credit 821, giving it a zero balance. Then we're going to do the next expense, which is insurance expense, on the 31st. Because we have a debit balance of 300, we're going to credit 300, giving it a zero balance. On the 31st of miscellaneous, we have a debit balance of 347, so we're going to credit 347, giving it a zero balance. And last, supplies expense. On the 31st, we have a 713 debit balance, so we credit 713, giving it a zero balance. Okay? So let's go ahead and we'll do the income summary. What we're going to do is you are going to add the 821 credit from advertising expense to the 300, 347, and 713. Add all four of those credits together, and you should end up with a total of 2,181. So here on the 31st, we have a debit. No. Yes. Sorry. We have a debit. And the reason we're debiting is because these were all credits. So we did credits here on the expenses. Now, to balance that, we need to do a debit. So on income summary, we're going to debit 2,181. $5,511 balance minus 2,181 debit gives us a balance of $3,330. Okay? Now, we need to put this on the journal page. And so this one takes, it's kind of a longer item. So, here on the journal page, on the 31st, income summary was the debit in this instance, so it's going to go first, because debits always go first. We are going to debit the 2,181. And then we're going to do each expense individually. So, we have advertising expense. And it was a credit of $821. Insurance expense. And it was a credit of $300. Miscellaneous expense was a credit of $347. And supplies expense was a credit of $713. Okay? Now, to make sure that we've done this right, and to make sure everything's journalized and posted properly, the posting reference for supplies expense, just make sure that you have the 713. So it's 540 for supplies expense. So we're going to write 540 here and come back over here, and we're on page 4 of the journal. So 4. And we're going to do that for each of the expense accounts. So miscellaneous expense, 347, make sure that we've got that right. And so it's 530 here, page 4 here. Insurance expense, it's 300, and make sure the 300 matches up. And then we do 520, page 4. And then advertising expense, 821, 821. The account is 510. And so then over here we're page 4. Then we do the income summary, 2,181. Look on over here on the ledger, 2,181. So this account is 330. And over here we're doing page 4. Okay? So we have closed out all of the income statement type accounts. So now we actually need to close out the income summary account. So we are going to come over here to income summary. We need to close this out. So on the 31st, because we have a credit balance of $3,330, we need to do a debit of $3,330. And because our income summary ended in a credit balance, we know that we had a net income instead of a net loss. If we had a debit balance, we would have had a net loss. But we debit, and then that gives us zero balance. This then goes into the capital account because net income increases capital. So on the 31st, we are going to, because we debited, we're going to credit 3,330. We're going to, because this is a credit and this is a credit balance, we're going to add the two. And so you should end up with 9,873. So 9,873. We have to put this on the journal page. And so on the 31st, the income summary was debited, so it will go first. So income summary. We debited 3,330. And on the Darlene Wong capital, we credited 3,330. So now make sure everything is right so that we can do our posting references. So income summary, debit 3,330, debit 3,330. So account is 330, page 4. Capital, credit 3,330, credit 3,330. The account is 310, and the page is 4. Okay, so we've taken care of income summary. The last account that we have to close is the drawing account. So drawing is also a temporary account, so we're going to come here, have our drawing on the 31st. Because we have a debit balance of 2,100, we need to credit 2,100. Gives us a zero balance. This will also then go into capital. So on the 31st, we're crediting, so we're going to debit up here. And remember, we're debiting because debiting capital makes it go down. Drawing money out of the business makes capital go down. So, because we have a credit balance and we're debiting, we're going to subtract the debit from the credit. So 9,873 minus 2,100 should give us 7,773. So this is our new capital balance. Okay, we need to put that on the journal. So on the 31st, and since capital was the one debited, Darlene Wong capital is going to be debited 2,100, and Darlene Wong drawing is going to be credited 2,100. Okay? Now we just want to make sure everything is lined up right. So with capital, we have a debit of 2,100, debit of 2,100. So the account is 310, and page over here is 4. On the drawing, we have a credit of 2,100, credit of 2,100. So the account is 320, and the page is 4. And then we are done with the work together 8-2.